Good morning. Thank you for joining us for today's webinar, Attaining Your Post-COVID Business Goals, the Transition from Uncertainty to Success, presented by Rea Associates and FocusCFO. My name is Imani Fields, and I'll be introducing today's presenters and moderator. Before we get started, there are a few housekeeping items to cover. If you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. Also, if you'd like a copy of today's slides, you will find that they're available in the handout section of the webinar dashboard on your computer screen. Today's webinar will be presented by Matt Long and Jeff Semple and moderated by Doug Hauser. Jeff Semple has more than 30 years of experience as a CEO and president of FocusCFO, with substantial experience in leadership, business development, team building, and financial management, as well as implementing processes and systems for reputable, predictable results. Currently, as a Vistage Small Business Chair, he spends hundreds of hours a year helping presidents, CEOs, and owners turn stumbling blocks into stepping stones. Matt Long, a principal with Rea Associates, oversees the firm's client advisory services practice. With more than 10 years of experience, Matt is responsible for identifying the best solutions for his clients and overseeing the execution of the team's service offerings. His area of expertise include client advisory services, business and tax strategies, financial reporting, and business consulting, particularly in the areas of restaurants and hospitality industries. As the moderator of today's event, Doug will help facilitate a discussion that will bridge the expertise between Matt, client advisory services, and Jeff's business leadership prowess. As the principal and director of construction and real estate services at Rea, Doug's areas of expertise include financing structures, cash flow management, balance sheet management, succession and exit planning, and long-term capital/liquidity event guidance. Today's webinar will review the effects of current economic uncertainty while providing you with insight into how to manage your costs, improve advisory relationships, dive into future planning scenarios, and more. And I'm going to pass it over to you, Doug.
Thanks, Imani. Thanks for the introduction. Well, you can skip my picture there. Nobody needs to see that. Yeah, we're here obviously with Matt and Jeff today, and I look forward to discussing, really what we're seeing with clients out there, prospective clients, and just some of the best practices that we've all learned over the years. For myself, I also spent 20 years in corporate banking and corporate finance, and have had the pleasure, I should say, to unfortunately learn a lot through some different downturns and all that, and see what works. I know Jeff and Matt have much the same experience. So let's start off with that a little bit. We'll start with you, Jeff. What are you seeing out there right now as we're kind of past that initial crisis mode? What are your clients? What kind of mode are they in right now?
Well, thanks, Doug. I think one of the first things we did at FocusCFO, as the pandemic kind of took root, is we went and built a best practice, a strategy of what we were doing with our clients to kind of walk them through the initial stages. But what we see now is that a lot of people have gotten their PPP funding or the disaster loan funding, and some of the risk we see is that 4, 5, 6 months from now, as the banks potentially tighten credit,
right,
and as we have higher operating costs due to COVID, and quite frankly, are potentially carrying more inventory due to supply chain disruption, longer receivables, older receivables. So we're seeing a lot of cash strain on the businesses.
Yeah. Well, and you bring up a good point there, Jeff. I mean, we're here today really to talk about what's next. We've been, now that we're essentially 5 months into this. So Matt, what are your thoughts initially as we've gotten past kind of the initial shock factor, as it were, and now we're into let's deal with what's next?
Yeah, I think for most of our clients, there's still a lot of uncertainty out there, and so where what does that leave them with? And they're facing this new normal, and we're just kind of making the assumption right now that things aren't changing, at least drastically, anytime soon, and that we have to deal with the current environment that we're in. And that, like Jeff had alluded to, means taking a good hard look at your balance sheet and making sure that you're in a good financial position and you're not highly leveraged. And then thinking about where do we want to get to in 2 months, 4 months, 10 months, next year, and where do we want to be, and what's really going to survive, kind of more survival mode than anything.
Yeah, that's a great point, and I think that leads us right to the start of really what we want to talk about today, which is the business's foundation. So maybe we can move to that. Yes, thank you, Imani. And I think you bring up a great point there, Matt. We're telling clients, I know in the construction space, even though all of our clients and the folks I talk to in that area fared very, very well so far, it tends to be a lagging industry. There's concern about project financing and funding next year, but let's operate under the assumption that we're going to be in this current scenario at least through 2021. And let's build our business's foundation based on that. And if things are better, great. But let's build and strategize the foundation of our business around the assumption that it won't change next year. So, Jeff, with that, again, as we've we're past this initial shock phase of it. Where does an owner-managed business start at this point? Now that we're 5 months in, and I have to take a step back and look at my business's foundation, where should they start in your opinion?
I think you got to go all the way back to ground zero. I mean, the foundation of a business is like building a house, and without a proper foundation, it's really hard to build a business, run a business. And when I say it's like building a house, you either have processes and systems, you have the right financial reporting, you have the right information that you need to move forward. And in a lot of cases, if you don't have a foundation, the owner acts as the foundation.
Right.
They are the process and they are the systems, which makes it hard to sustain the business.
Yeah. So Matt, at this point, I mean, I think, and Jeff brings up a great point there, it's really an opportunity to reset from ground zero. I mean, would you advocate for that as well? And then how do you sort of begin that process?
Yeah, I think that regardless of the economic environment, businesses need to reevaluate their current systems. Businesses need to reevaluate their financial reporting, their internal controls and processes. They need to be doing that continually. I think with everything that's happened with the pandemic, it's really just forced their hand in doing so. Mm-hmm. A lot of businesses already had some really solid internal controls, some really nice financial reporting, both financial reporting and then kind of going above and beyond the basic financials. But there's a lot of businesses that did not have that, kind of have that groundwork laid. And so they're already behind the 8 ball because now they're trying to create that from scratch versus better improving what they've already had. And it starts with looking and saying, okay, what's important? What financial information is important to these business owners and to these decision makers? And then how do we get to having that financial information available to them readily and timely for them to actually do something with it? And to Jeff's point, that's where it starts with looking at your processes, your internal controls, your accounting system itself, making sure that it best suits your business. And then from there, just building out solid accounting principles and practices, and then taking it to what does our closings look like? What does our financial reporting look like? And just kind of working your way up those layers.
Yeah, that's a great point. And particularly as dealing with the third party advisors, whether it's the bank or insurance, bonding, whatever, they need that information critically fast right now to be able to best help the clients. And that's one thing I think we're continually surprised to see, even during prior to this, that there's still a number of companies that can't produce good, accurate financial reporting and information until, maybe 45 days past the prior month end, or, halfway through the year, they still haven't closed out the prior year. And, right now, I think, to your point, Matt, you've got to get those basics down and skinny it down to some key performance indicators and provide that information to the banks, et cetera. So, Jeff, talk a little bit about your cash flow analysis and how important that is. Maybe what kind of process you go through with clients in looking at that.
Well, I mean, first, to go along with what Matt said, I think that the pandemic put a spotlight on maybe the lack of some of the relationships we really needed to have, i.e. a banker and our accounting firm. As we build that foundation, you can make a great decision with bad information, and it's still a bad decision. So, to get along from the cash flow perspective, if you think of profit as water, we can go for a little while without water, which makes cash our air.
Mm-hmm.
We can't go very long without cash. And one of the things we do at Focus is that, we run a 16-week cash flow analysis so that we're really understanding, what our cash operating cycle is.
Yeah. And that operating cycle that you speak of, can you define that a little bit better for people? Because we get a lot of clients and folks, maybe very small or micro business, and they tend to operate just out of the checking account, so to speak. But I think your mention there of that cash cycle, that cash operating cycle, is critically important to understand. So can you go over that a little bit for us?
Yeah, it's really just the measurement of the speed at which cash moves through the business, the outflows and inflows of money, from inventory to payables to receivables, so it's really measuring that speed at which the money moves through the business. And if I've got a high amount of inventory and a high amount of receivables, then I've got a large deficit of cash.
Mm-hmm.
So the faster I turn that cash, even at the same profit margin or the same gross margin, the more profitable I am, because time costs money.
Yeah. Matt, what do you see in your role with client advisory services? Where are some of the things that folks really need to focus on with regard to that cash cycle and that operating cycle?
Well, specifically with a lot of the restaurants we've been working with, they've been hit particularly hard by the pandemic, being forced to shut down and then being able to open for takeout only, and really relying on takeout and delivery services. And so what we've done with a lot of our restaurant clients is similar to Jeff, putting together a rolling cash flow. We're doing it off of this week's sales, and with the expectation that this week's is the new norm, versus, and then taking that and saying, okay, where do our margins need to be from a food cost, from a labor perspective? We know what a lot of our overhead is. What's kind of our break even here? What's our cash burn look like? And how long can we sustain this? Just given if things don't change. And we're doing a lot of analysis of that right now with our clients, particularly in the restaurant space, but all of our clients really, looking and saying, how long can we does this runway go for based off of what our current financial position and based off of our current sales. Now, I think that for a lot of our clients, the top line number is somewhat unknown and somewhat uncontrollable. And so we can only do so much to drive sales, but what is in our control is a lot of the line item expenses. And so taking a really good hard look at some of those expenses and saying, is there some fat here we can trim? Is all of this a necessity right now? Maybe long term it makes sense to be investing a lot in our marketing approach, but maybe right now we want to pare it down a little just to have that additional cash flow available because of all the uncertainty.
Yeah, I agree with that, and certainly in the construction space, that I deal with, even as I said, companies are still doing quite well. Many are going to have, in fact, record years this year, but we're encouraging them to adopt, if they haven't already, many of these same things, because that the impact will be felt, whether it's through projects that are unable to be financed, or government and municipal entities that have revenue shortfalls, and maybe some public projects can't get done. You've got to prepare and be able to provide this current information. I know in talking with many of the lenders, the financing providers out there, the one thing they continue to emphasize, and that has frustrated them, is that when a client comes to them or a potential borrower comes to them, they can't state the impact that COVID has had yet. In other words, they're not providing current enough financial information. Maybe they're showing them first quarter of 2020. Well, that doesn't mean anything right now because you're not seeing any impact. So you've got to be able to provide this real-time type of financial information. And Jeff, I know you talked about that the cash flow modeling 16-week. I know, Matt, that's something you're a big advocate of too. But Jeff, how do you get somebody to implement that hasn't done it? Can you pare that down pretty simply so that folks can implement that without too much difficulty?
Well, that's the nice thing about FocusCFO. We've got close to 100 CFOs in the company that have that type of experience, that come from a larger organization, that are able to bring those traits to a smaller company to provide that kind of information and guidance in the business. So I leave that to the smart guys, Doug, in our company, and that's why I'm an area president and not a CFO.
Oh, come on, Jeff, you could handle it. I know you could.
Yeah, he certainly could. What I'll say there is it is a time-consuming exercise to do it right. You can go through the motions and put something together, and really not spend the time to analyze it and have it as accurate and as realistic as possible. And if you're not going to invest the time, it's not meaningful because it's not going to be accurate. And so there is quite a bit of legwork up front and getting it laid out the way you'd like, to where it's really reflective of your cash flows. But then maintaining it's much easier, and maintaining it on a go-forward basis is not nearly as time consuming. And so, with FocusCFO or with Ray and some of Ray's team, lean on the folks that know this stuff, and lean on the folks that have done these exercises before. And I just want to circle back to a point that you both hit on with the importance of having strong advisors and CPAs and banking relationships. I think this pandemic made it pretty evident the importance of that, and also really showed who had those existing relationships and who didn't. And we could see it with our clients and with our prospects, with some that were kind of more in panic mode and a fire drill, versus others that took a more intentional approach to everything and was able to kind of step back and say, okay, this is hit, this is out of our control, how do we shift? And just being much more prepared.
Yeah, I agree with you, Matt. I mean, those that have had, I would say, less of a shock early on through this have included those third-party advisors, whether it's us or if they're using FocusCFO, getting all of us involved and around your financing provider early on gives those credit providers comfort that they know they've got quality information, they've got advisors around that client that are helping inform them, and it allows them to have that access to capital and look at some type of recovery, even if the business has to entirely reset from that's vitally important. So, Jeff, what are some of the things you've seen in terms of trying to put together, budgets and things like that make sense for not only the client but those financing providers?
Yeah, I think, first to go off of what Matt said, I think that, look, as a business owner, a past business owner, I know the information I want and I know where my expertise lies. So I depend on people that are that have the expertise to build those cash flow models and financials to provide me the information I need. When we look at budgets and forecasts going forward, I can either build an organization that's reactive and pay for my mistakes along the way and hope none of them are big enough that they kill me. Or, I can build a proactive mindset in an organization with budgets and forecasts that allow me to address issues or problems before they ever happen. Now, we're not going to be perfect, but we certainly will minimize the impact of any of those. And with the proper KPIs and managerial reports, forward-looking information, it allows us to sidestep some of the speed bumps that will catch us off guard if we don't do it otherwise.
Yeah, and Matt, to that point, I mean, we've seen some clients successfully navigate, with our help or other advisors' help, having that sort of plan A, B, and C. In other words, this is the first things that I'm going to, reevaluate or sort of activate. This is the second level. This is the third level. Talk a little bit about maybe getting through that process with clients and helping them evaluate what's important, where do we really need to focus, what needs to happen.
Yeah, and Jeff kind of alluded to it earlier. A lot of small businesses, most small businesses are very resilient, and most small businesses are built on an owner that knew their trade very, very well. But that maybe couldn't necessarily or doesn't necessarily translate that to any kind of financial information. But business owners, for the most part, really have their pulse on their industry. They kind of know the direction things are going. They know kind of what's down the road and where they need to be forward thinking enough to focus. Where I think there's a little bit of a disconnect is them understanding what's the best move for their business based on what the industry may be doing. And, we've been working with a lot of our clients and saying, okay, let's take a look at your product mix. Let's take a look at your service offerings. And let's dive down a little deeper and say, what is our kind of bread and butter? Where is we can do this work all day long. We have tons of it lined up. It's easy for us to get, versus saying, okay, some of this other type work may be higher profit margins, and it's kind of our first choice of work, but then having something secondary to fall back on to keep our folks busy, to keep our production levels up, whatever the case may be. And just having conversations with our clients and with these business owners and saying, helping them understand where they're making their money. And if they offer different products or different service lines, understanding what that pecking order looks like so that they have somewhat of a strategy or an approach to go to market.
Matt, that's an excellent point is you bring up there, kind of understanding the pecking order of each of the different things that you do or products that you provide or sell, whatever the case might be. So, Jeff, can you talk a little bit further about, some of the things Focus does to really help clients understand and kind of do that deeper dive to understand where they really make money and where maybe they don't make quite as much?
Yeah, and I think this is why Matt and I and Rea Associates work hand in hand, and because we really get involved in the health part of the business.
Mhm.
And, where Matt, I would say the majority of the time you guys are in the foundational part of the business. So, we're able to build on what they do and partner as we go forward. But, it's really tying the operation to the financial statements, understanding gross margin, understanding what drives gross margin, understanding, for instance, I was talking to a gentleman that bought a piece of equipment. And when he bought the piece of equipment, let's just say it was $100,000. So I asked him, I said, so why did you buy the piece of equipment? He said, well, we were really busy in that area and I thought this would help us be more efficient. So I said, so what did you project the return on investment as? And I got the same answer that I just got right now. You don't hear anything. So we talked about return on investment and what that looked like. And he said, well, okay, so how much did it improve efficiency?
Yeah.
Got the same, dead air. So we talked about that, and we actually figured out that with the increased capacity of that piece of equipment brought to them, that if they put somebody in charge of sales, because nobody was responsible for the sale of that particular product, that if we filled that capacity, it would cover the complete overhead for their factory.
Wow. Yeah.
You bought a piece of equipment, you really didn't know what the return on investment was. Nobody was responsible for driving the sales of that. It made them feel better.
Yeah.
But, just talking through those types of things, I think there was a tremendous opportunity that they just didn't realize at this point.
Yeah. You bring up a great point there. It's really being able to measure what you're doing. And Matt, I know you're a big believer in key performance indicators. So, how do you get, again, oftentimes we get clients that they're focused maybe on their cash position or, things like that, or getting the next order or the next job. How do we boil that down to some really great measures that allow a business owner to kind of react in real time?
Yeah, I think that for the most part, a lot of our, excuse me, a lot of these small business owners and mediums, if they don't have KPIs, they kind of have these, they kind of go off their gut, and they may not necessarily know what their KPIs are, but they have probably a decent sense of where they need to be, but they aren't necessarily tracking it or seeing any kind of trends with it. And really it starts with, in my mind, looking and saying, what are the drivers of this? What are the variables within all of this that is going to drive production or drive profitability or revenue and growth? What is it that makes it? What are those drivers that are going to make the difference of a really strong year or strong month versus struggling? One, for instance, we're working with a tree service provider who has grown exponentially over the last 2 years, and so they do a lot of tree removal, tree pruning, that type of thing. And I said, well, what are you trying to get from an hourly rate standpoint for your work? And he said, well, he goes, I kind of go out there and just look and give an estimate of what I think's fair. We did some analysis, and it turns out that he's charging about $300 for a crew of 4 to be out there an hour if you kind of backed into it. Mm-hmm. When we went through the analysis, he really needs to be at about $90 to $95 an hour to really even break even when you factor in the equipment that he's renting, the maintenance on his existing equipment, the guy's downtime, the folks that are doing the estimating and scheduling and sales side of it. And he really needs to be about 25% higher of, as rates. And he was doing it all based off of his gut. And we helped him build out a model that he can then say, okay, every year, let's reanalyze where I need to be from a price perspective, knowing that I need to at least cover my guys' costs and cover all my maintenance.
That's a great example you provide there, Matt, of just kind of backing into that number. Sometimes you can do it that way, and again, sort of build that foundation. And that's, I know, part of what you and your group does with client advisory services. You try to go through that with clients either on a monthly or quarterly basis, and take a step back. Let's evaluate this thing, get out of the whirlwind and figure out exactly what we're looking at and where you need to be as part of that process. That's tremendous. Jeff, what do you see when you get, as you move up the, move up the timeline we've got here, again, you're talking about healthy revenue and managing risk and some of those things. So where do you go as you kind of advance along this continuum?
So, when you look at healthy revenue, it's really understanding gross margin. And what Matt talked about earlier is understanding how we make and where we make our money. So do we need to adjust our product mix, or is there products that we make more money on than others? Where do we want to spend the majority of our time? So, and then having a good sales process. How do we get sales? What's our close rate, or how many calls do we need to make, or how many customers do we need to have? So it's really understanding what that sales funnel looks like, and the metrics around that, so we know how to drive more sales. And when I think about risk, it's really about processes and systems. And in processes and systems, repeatability, predictability in the business, I think, is a big portion of what drives value. Small business owners that I talk to on a regular basis have the majority of their wealth tied up in their business.
Right.
Way to get it out. And they think in a lot of cases that what they make or what they take out of that business is how they equate the value. But if they are the process and they are the systems, it's not transferable value. So that's why it's so important, and I guess why I'm so passionate about what we do is really driving process, systems, budgeting, forecasting, KPIs, cash flow, so that we build transferable value in that business. So at some point in time, they have the ability to monetize all their hard work, versus trying to find their twin who is going to come in and have enough money to pay for that business.
Right.
And in some cases, we're lucky enough to have family members that have worked in the business but again, they don't think the same way. So we want to give them the best chance for success. And I think that those things do that.
Yeah, I think that's a great point that you bring up, is building out that process and procedures so that, really, I don't want to say anybody can do it, but that it's certainly transferable to, more than just that owner themselves. I know, Matt, you've experienced that quite a bit too with clients and that. So talk a little bit about, helping folks, again, build that foundation and go through implementing that. I mean, that can seem very daunting to people if they're like, oh my gosh, we don't really have that built out. I mean, what kind of time frame are you talking about? Say you're a $5 million a year business and you don't have all this sort of foundation. What kind of time frame and are we looking at to do that kind of thing?
Well, I think number one, it's ongoing, and it never ends, and continually reevaluating it. But you have to start somewhere, and it can be overwhelming for businesses of, I don't have anything, I have no structure. And you're saying that I need these processes. You're saying that I need this foundation put out, and I need these internal controls in place, a strong accounting system. But I'm starting with nothing. Or very little. And so, it starts just taking baby steps and working towards it. I think that typically, when Jeff's group or our group or in tandem, we work with clients, we can make some meaningful, impactful changes within, a couple short months. And usually there's some headaches along the way. There's a little bit of frustration. That's, it's never perfect, and full disclosure, but it's progress forward. And usually within about a year or so, you've kind of worked out a lot of the things, and you're starting to build that foundation. And then it's just building upon that and looking at that and saying, okay, we now have documented some of the ways we're doing things. We've now spent time looking at who's doing what functions to make sure that we have some nice controls in place. Okay, let's retune that. Let's look at it and say, is this the most efficient way of doing it? Is this what we want to be doing? Is this the way we want to be doing it in 2 years from now, 5 years from now? And trying to look at how can we build it out now for the future.
I think that's a great point. And one of the things I always caution folks about is don't think of this as a cost. This is an investment, as you both alluded to, whether at some point you hope to transfer your business or whatever, you will see a significant return on investment by having these processes and procedures in place, because it allows you to make better decisions, quicker decisions, more informed decisions. So, it's not, again, it's not a cost. It's really something that you do see a true return on investment with, I think, tremendous amount. Yeah, go ahead, Matt.
I was just going to chime in there, and I wholeheartedly believe it's an investment in your business for you to take a good hard look at these things. And keep in mind, we know that change is never easy. And so we're aware of that, and you can't change everything at once, right? There's no fix for this. There's no secret serum or Band-Aid that's going to just fix all of this. It's incremental change, and you want to do it very intentionally and sometimes slowly, just to make sure that the steps you're taking are the right steps.
Yeah, absolutely. Jeff, let's talk a little bit about transparency within the business. I know one thing that always surprises me, I've seen all across the spectrum where I see businesses that, boy, they're fully transparent. Every employee knows exactly how they're doing, and they're all, aware. And then others where it's very walled off, and it's, only the owner knows, and it's a great mystery to everybody else. What's been some of your experience, and what have you learned in terms of the transparency of the information in the business?
So I think that, so I've been where many of the people listening, are, having started a manufacturing business and built that, and having been the process and system in my business. And every time we grew, it just took more hours of mine. And, and then transitioning to a business that was able to operate without me. And, we went through everything from, reviews to, we tried everything. And the thing I think that made us, we were growing so fast that really made us successful in building the type of culture, it was really driven by a lack of time. And, where we fell in this is that everybody needs to know where they stand and how they're doing all the time. So team alignment, one of the first things we put on this is making sure we communicate with everybody how they're able to impact the goals of the organization, what their expectations are, how they're performing. And it's the only way they're going to be able to help is if they know how. I think team alignment, and we can either row the boat together, or we can have people rowing one direction and us rowing in another. So I'd rather have everybody rowing the boat together and understanding how they can impact the goals that we have set for the organization.
And I think you're spot on with, they can't drive the business forward if they don't know what where they're going, where the business is going. And what I'm seeing is the younger folks, they want to be in the know more. So as younger folks are coming into the workplace, into your organizations, they want to be in the know because it helps drive them. It gives them motivation. It gives them a sense of buy-in. It gives them purpose. And I think that that's the case regardless of age. But I think so now than ever, we're seeing that the younger workforce really wants to know what's going on and wants to help drive the business where it needs to go and kind of know where they stand with things and what they're doing matters.
I agree wholeheartedly, Matt. As a father of 3 20-somethings, I can tell you they want to know everything. But in your experience, how much transparency does a business owner need to provide? I mean, do we go necessarily the whole 9 yards where it's like, okay, you see the full financial statements, or do we show gross profit, or where do we draw the line there?
In my experience, typically, when we work with a lot of our business owners and business decision makers, we're showing their folks what they can control. So we not necessarily giving them a full picture of a full set of financials because it's out of their control. But we are showing them some KPIs. We're showing them what top line numbers, margins, and if there's other controllable expenses that they could have an impact on, we're including those as well.
I think that's a great model. Jeff, what's your experience with that, with sharing with the workforce?
Yeah, and I've seen everything from open book, where they share everything, to just KPIs and controllable measurements that they can affect. I think it's really a personal decision by the business owner, but we do need to share information so that they know how they can make an impact. I think everybody, comes to work and wants to do a good job and wants to be part of the team and feel like they're part of the success. And so I think everybody needs to show a measurement or something that allows them to know whether they won at the end of the day.
Yeah, that's a great point. So let's talk about then that employee input. So now we've given them some information so that they have a better understanding of things that they're involved with, how the business might be performing. Matt, what do you see in terms of then going from bottom up, allowing those employees to have some input in terms of ways that they can improve things, efficiencies, things like that?
Well, a lot of times, those are the folks that are kind of on the ground. Those are the folks in the weeds. Those are the ones living it day to day and getting their opinion. And it may be non-financial related at all. It could be strictly operational. It could be, what's frustrating you, what's causing headaches, what's slowing you down, just getting their input. And maybe it's something that can't be changed, but maybe it is a quick fix, or maybe it's something we can work towards that's going to make us more productive, make us more profitable, more efficient, or maybe it's something that's just going to help with culture and help build morale. And I think that soliciting the input of the entire team, regardless of the level, is of the utmost importance, because if you're going to segregate it to the opinions or to the input of just a select few, you're really doing a disservice to getting a true picture of your personnel and your workforce and some of the challenges that you may be having and not be aware of.
Yeah, absolutely. So Jeff, I know you talked a bit about where FocusCFO, you guys focus on kind of that growth and value as you get along the continuum. Let's try to, for the folks in the audience, give them an understanding of where your firm tries to focus its efforts in working with a client, and then Matt, I'll let you kind of explain client advisory services and where we like to focus.
Yeah, I think there's a lot to talk about in the growth and value side of the business, but I think right now, what we're talking about is the foundation and the health of the business.
Mm-hmm.
And really, where we get started or where we make the biggest impact is building a healthy business before we grow. I can't tell you how many times that I talk to a business owner that's, has the goal, we're going to grow $1 million next year in revenue. And you come back to them, you talk to them again the following year, and they grew $1 million. They just made less money. So, doing those types of things on maybe a lacking foundation or not understanding what drives profitability, it's really making sure that, coaching on the foundation part, or, having somebody like Matt there to make sure that we're provided the base information in a proper way, and we're getting the accounting reports, we're closing in 10 days, and we can build those into budgets, forecasts, cash flows, KPIs, all those forward-looking information that allows us to then manage the healthy business, understanding what our product mix is, some of the things we've talked about before, reducing inventory, or we're increasing the amount of times we turn inventory, reducing our accounts receivable, and generating more cash. And once we do those things, and then we can start to talk about what growth and how to build value.
Makes sense. So Matt, where does Rea and the client advisory services kind of fit within that continuum in terms of what we do?
Yeah, and Jeff alluded to it. Our sweet spot's really kind of that foundation side of things. It always starts with us working with a new client and coming in, and we're not doing any adjusting entries. We're not doing any transactions or anything like that. We're simply shadowing. We're simply observing what's currently going on, and how can we improve upon what you already have. And it all starts with the foundation for us and what our group does, and help really get that developed and developed well, that we can build on it. And then we get into what we're calling the health stage of it, where we're getting into modeling and cash flows and things of the like there, and working in tandem with Jeff and with Jeff's group at Focus, and what's what's important to this business in particular, and maybe cash flow isn't a non-issue. Maybe this thing's just a cash cow, but it's not turning any kind of profit. Okay, let's focus there. Or maybe it's the fact that they're in such growth mode that they don't know. They may put themselves out of business from just growing too fast. How can we kind of reel it back in and make sure that they're making some sound decisions, and working with Jeff's group? So I think, to your point, we really focus on probably more, the foundation and health side of it, probably much more so than we do the growth and value side of it, which seems to be where Jeff and his team is really their sweet spot. And I think that we're all confident in both Jeff's group and our group's confident enough to do a lot of it. But working together, I think, makes a lot of sense, because getting some of the business owners' institutional knowledge, getting Jeff CFOs involved, and from a strategic side and from a value side and growth side, and then us kind of in the trenches and looking at the day-to-day, looking at the month-to-month, and looking at from both a current timeline and short-term forward thinking as well.
Yeah, absolutely. Jeff, what are your thoughts on where should a company go from here? We're, again, kind of bringing it back around to where we started. We're 5 months into this thing. We've got still a lot of uncertainty. What should your typical owner managed business, what should be priority number 1 and 2 right now as we move forward?
Well, I think if you haven't stress test the business and understand what operating looks like at 50% of revenue, 60% of revenue, whatever that revenue is. I think that's really one. You got to get ahead of it and start looking forward so we're not making knee-jerk reactions when it actually happens.
Mm-hmm.
So we can put some thought into how we're going to operate in those cases. And I really think you got to go back all the way to square one and start to build, because what we're in now isn't going to go away anytime soon. So we need to review our strengths, our weaknesses, our process, our systems, all the profit leaks, cash leaks in the business. Understand where we're going to have increased costs due to the lingering pandemic, and just review it all the way through. And I think make sure we got the proper foundational and financial reporting, and really have a plan. And have a plan, not just we'll figure it out when we get there.
Yeah, and I know we talked about this earlier too, but when you get to your credit providers and your other partners, you've got to have that plan. We're all obviously guessing to some degree, but you want to show that you've put some thought into making educated, informed plans, maybe a best case scenario or worst case scenario, and show those partners what your plan of action is.
Along those lines, Doug, I mean, we can't do it all by ourselves.
Mm-hmm.
We need a team around us, because, as one person, we only know what we know. And having the right people around us will only make us better. Will help us look at things differently than we have, or we'll do on our own. Yeah.
Matt, what are your you have any final thoughts before we get to Q&A? Because we want to allow a few minutes for that, but what are your thoughts in terms of moving forward? What should folks be thinking about?
Yeah, I think, to keep it simple, and probably in my mind, maybe the biggest takeaway from today is, and we've all hit on it a couple times now, but making sure you have that third-party team around you and those relationships have been built, or you work towards building those out. So I think that, if you have a strong banking relationship, a strong relationship with your accountants and your advisors, your insurance, if you already have that, continue to drive that. Be proactive, reach out to them, let them know where you stand on things, let them know what you're expecting to, your business is expecting to happen over the coming months. And if you don't have that team built out, work to do so, and start doing that soon, and sooner than later, because with the uncertainty, we don't know when we're going to need access to credit facilities. We don't know when things could really take a downturn at any given point, even if you've been relatively unimpacted. So that's probably the biggest takeaway. And, working towards building this foundation, working towards the health of the business, that doesn't happen overnight, but we can start making small incremental steps towards it now. And it starts with just getting your financials accurate, and financials really solid to where they are presented well, they're accurate, and they're reliable. And then from there, you can start looking at KPIs. You can start looking at how can you do things more efficiently? How can we get a quicker turnaround on our financials? Those types of things.
Yeah, absolutely true. So, Imani, I don't know if we want to move to any Q&A. We're happy to route those to Jeff and Matt, and if not, certainly we can get some additional final thoughts, perhaps.
Yeah, I think some final thoughts would be good. We have a quiet crowd today, but they've been very attentive, so I'm sure they're just listening to you guys' good info you're giving out.
Okay, Jeff, any final takeaways or thoughts on your end?
I wish I remembered who said it, but I think it was, if you want to go fast, go alone. If you want to go far, go together. And I think that as business owners, we oftentimes work in our own silo, And, having been there and done that, I think that, being able to reach out to experts in other areas versus spend our time doing things that we're either not qualified to do or it's not our expertise. And if we can, as a business owner, if we can leverage what we do great and depend on others to help us in those other areas, it'll be easier for us to achieve the goals and objectives we have.
Yeah, very well put. And I think the other thing, when you surround yourself with other people, you avoid groupthink, and you get some diversity of thought. I always tell folks, I'm not that smart, but I've seen lots of stuff. I've seen lots of stuff in 30 years of dealing with construction companies, so I can tell you things. And again, I think it's that diversity of perspective and thought. So, Matt, any final thoughts on your end?
Yeah, kind of to piggyback off of that, Doug, they say smart people put smarter people around them, and I think that's all too true. I think that it's important that because of everything, all of this uncertainty, that we continue to try to stay nimble and adaptable, because we don't know what the future holds, whether that's a month from now, whether that's 6 months from now, a year from now, or just the new norm. And so we have to be able to stay adaptable, and we have to stay nimble and be able to make these shifts as needed.
Awesome. Yep. Great. Very succinct summation there. Really appreciate that. And Imani, I don't know if we have any final questions. If not, I certainly thank you all for letting me moderate today, and thank certainly Jeff and Matt for their expertise.
Nope, that's it. I'll close it out for you guys. Thank you guys so much for presenting, and you, Doug, for moderating. And thank you guys for joining us today on Attaining Your Post-COVID Business Goals, the transition from uncertainty to success. We hope the team was able to provide you with some valuable insight in regards to best practices and potential solutions. If you sign off today and realize that you have additional questions, you're always welcome to reach out to Matt and Jeff directly. Thank you again. We hope you have a great day.
Thanks, everybody.
Thanks.
Thank you.